The daily S&P 500 cloud chart first. Price in the pre-market hours for the S&P 500 at 5:35 a.m. Central Time on the 18th is 43.55. And today is the last day for having the cloud bottom 26 bars back at 43.55.53. So for right now, the lagging line is right on top of the bottom of the cloud. Tomorrow it moves up and then continues up after that. And eventually the cloud twist is at 44.49.39. So around that bottom of the cloud, 26 bars back, 43.55.53 is still the trend factor down to. Then the daily baseline, 43.64.22 for current price. That's a familiar area as price is in a consolidation zone there. And then the relative retracement up one is right above that, 43.65.67. The pivot point, 43.59 for now. The weekly diamond bottom line 2, 43.52 S1, the 21 EMA. And the D wave, down wave 4 shifted over as they're ticked higher than where it was over here. So that means that zigzag starts the sequence over of having the average true range for each consecutive bar being lower than the previous ATR 4 bars back. And that sequence has to happen 4 in a row, and then we get the swing point to the downside. Till then, every successive tick higher will shift the 4 over. And if that keeps happening to the upside, and it surpasses this high where this D wave down wave 2 is, then the D wave down wave 2 will shift over to wherever that 4 succeeded that high here. And as we just saw from that clip from the big board, the 50 EMA is still to the upside, 43.77.59 in solid gold here. And the 21 EMA is to the downside, 43.48.44 in this solid blue line here. And the cloud baseline is right in between the two, 43.64.22. And they must not be waiting for Fed speak, because you don't have to wait for that for traders and investors to make a decision which way this thing is going, one way or the other. You can see them all here. So it looks like Thursday is the initial jobless claims, and everybody must be waiting for that here. And the Wall Street Journal here for Market Watch is predicting a tick up in jobless claims, 210,000 over 209,000 last time. I would not go on any of that. I would have to wait and see. And the US LEI for the economy is predicted to be flat, no change from last report. And then Fed speak galore before the silent period for their meeting coming up. And Friday is really nothing scheduled, so it must be the initial jobless claims that everybody's waiting for. And a zoomed out look at the S&P 500 daily chart with the upper and lower ranges and regions here shows us right in the middle in no man's land right here in a consolidation pattern. And the EMAs, the green one here in the thumbnail is the 50 EMA, and that's starting to pull the stick back and try to head up. The 20 EMA is already gone up, but the 20 simple is still headed straight down. Same thing with this solid green one in the main window, the 50 simple moving average headed straight down. And in the thumbnail, this red one here is the 35 EMA, and that's still pointed down. The 100 simple moving average in the main window in orange is still headed straight up. And same thing with the 200 simple moving average in solid black down here. So the long range moving averages are headed up, and the EMAs of the short range are headed up too now, but the simples are still headed down. So it's going to take another few days or a week to get these to curl around and head up for the 50 simple and 20 simple. And I couldn't even begin to guess what's good news or bad news according to the jobs report for tomorrow on Thursday the 19th. But price has a lot to go through to get out of no man's land and back into the upper region here. And right now it's closer to going into the bottom region in light blue here at 4325.28. That horizontal line here. And the weekly broadening top in dashed red from the weekly chart is still there, and it's right by the daily horizontal line 4325, so pretty good support. Weekly baseline right here 4328, and here's that broadening top wedge in dashed red here. You can see that price is still above it, and the price in the pre-market hours still has the weekly diamond bottom line 2 at 4352.96, right above pre-market price at 4355. So pretty good support to the downside and really good resistance to the upside. So it's going to have to be a strong decision tomorrow for the jobs report to get one way or the other. And the daily price flips have been flipping like crazy. So one day it's a buy setup, next day it's a sell setup. The weekly needs to end the week below 4320.06 for the price flip to the buy setup one count. So this is really an indication taken together of consolidation. And on top of this consolidation pattern is the upper Bollinger Band. And here's the lower band. You can see it's forming a possible Bollinger Band squeeze coming up, where the pincher, like it's forming, will get close together, and whichever way it breaks out of that to the upside or downside from the Bollinger Bands is a really good indication of the trend to come for S&P price. That's if the jobs report doesn't have a major effect tomorrow on the 19th. If we can continue going sideways, this pincher will come closer together and the squeeze will be on. And the Stark band in black here took a tick up, so both the upper and lower Stark band are pointed up. The channel 3 highs above the Stark band, and both of those are well above the Bollinger Band upper band. And to the downside, the channel 3 low is right close to the Stark band, lower band, and the arc down 3.618 level continues its arc upwards, and that's close together with these other two, lower Stark band, lower channel 3 low. And one bright spot, the QQE fast made it above 50 at 50.07, barely, but nonetheless above 50. And the slow QQE is climbing along with it, so it won't be difficult to go back under that again if they become closer together here. And the fast trigger down ATM is planing out but still in the red, so it's not pointed downwards too badly. It's holding its own up there above the overbought 75, and the slow ATM trigger up is pointed up, and maybe it can meet it above the overbought 75 line, and that would be a show of strength if it can do that. If the fast can stay up there and the slow meets it up there, and then maybe the pressure up will come off of the bottom here and start moving up. And the Shanghai momentum indicator here is having some decent up bars. It's positive the last couple of days. Couple of positives, negative, and then two strong positives is also a good sign. And the ROC took a tick up. It's still below its overbought line. DM1 did make it above the overbought line, and REI has a indication that it wants to head back down under the overbought 40 line here. You can see the other day there was a REI low risk down indication here as it was pointed down. So again, if these two, the DM1 and ROC, can stay above their overbought, and REI makes a quick move down below oversold negative 40 and then comes back up, while these two are still above at least the oversold line, then we'll have another buy signal maybe. And another good indication here is that the 9 simple moving average in red here is above the 18 simple moving average in gold, and that the 4 simple moving average in blue is above the 9 in red, and the 9 in red is above the 18. So here's a fledgling uptrend signal for the rainbow pattern, being the 4 above the 9 above the 18 in this consolidation zone here. So this is a good thing to see here. And opposite of that, you can see that the 20 simple moving average in blue is below the 35 simple moving average in red, and then the 35 is below the 50, so that's completely opposite. But that one that we just looked at before is a good sign that maybe this can try to fix itself here and get the 20 above the 35, then the 35 above the 50, and have the rainbow pattern going on here too if the 20 can get above these two. And you can see that visually here where the 50 MA simple moving average is still above the 35, and the 35 is still above the 20 simple moving average.